With the 10-year anniversary of the devastating Indian Ocean tsunami, investors once again regard the Indian market as an exciting growth sector. Here to discuss more is Eran Peleg, Chief Investment Officer at Clarity Capital. Mr. Peleg,
hi there.
Thanks for joining us.
Benjamin.
What is attracting investors back to the Indian market?
Well, the Indian stock market, equity market, has rallied significantly this year, up around 30%. This is while other emerging markets are struggling. Brazil, an example. Russia is a recent example. Other emerging markets on average are up only around 2% this year, and even developed markets are up maybe 8-9% on average. So
is this a recent trend, the surge in stock market?
It is a recent trend. I mean, recent years, India, if anything, was categorized as kind of a fragile five economy, one of those weak emerging markets that have, large current account deficits and large government deficits. Mm-hmm. The currency has depreciated by around 40% over 3 years, and its stock market underperformed. So definitely we're seeing a change this year.
And what explains the equity market's performance in 2014? It's performed quite well.
So yes, extraordinary well, and we've seen several key developments. First of all, back in September 2013, we've seen the appointment of Dr. Rajan as the central banker. This is a credible central banker. University of Chicago finance professor.
Boosting investor confidence, obviously.
Exactly. And also was chief economist at the IMF for several years. Second, we've started to see a stabilization in some of the key macroeconomic variables. Yeah. So, for example, the current account deficit, which I mentioned previously, has really started to shrink from over 5% of GDP down to less than 2%. And finally, in May, we had general elections, and we've seen the BJP party, headed by Modi, gaining a landslide victory. And this is a party that has really promised to deliver a much more pro-growth, pro-business reform agenda, which the market really was looking for.
So do you see this outperformance continuing into 2015?
We think it's very possible. First of all, at the moment, we're seeing investment flows into India because it is seen as one of the kind of preferred emerging markets to be involved in. But second of all, the macro environment remains stable. Which is a positive, and even more so now with the drop in the oil price, right. With India being a net importer of oil, it's helping both growth and right. Inflation to moderate. And even before that, we've started to see inflation moderate, which is could lead to us starting to see interest rate cuts in India, which is a positive for financial assets.
It sounds to me, from what you've said, that a lot of the outside factors weigh a lot more so than, say, the domestic factors within India itself. I mean, the fact that Russia, is not doing so well, China's slowing down, the oil prices are down. I mean, all of these factors really have a great positive impact on the Indian economy, correct?
So it is part of the story is that India maybe looks good relative to other markets or other, especially emerging economies, no doubt about that. Right. But I think that in itself, I mean, we are seeing a lot of the developments are positive internally. We still have to see that the government can deliver on its promises, which is probably one of the largest risk for investors in the Indian market, because at this point in time, as opposed to back, 1 or 2 years ago when people were very pessimistic about India, now optimism has grown, and therefore equity prices are higher, expectations are much higher, and if the government disappoints, investors could be disappointed as well.
Of course. Well, Eran Peleg, Chief Investment Officer at Clarity Capital, thanks for joining us on the show.
Thank you very much.
Thank you.